Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And today we're taking a look at two beaten down nuclear energy stocks to benefit from the AI data center boom to consider buying before their upcoming earnings releases next week. And those two stocks are Constellation Energy and BWX Technologies. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more. So before we jump into the broader nuclear energy bull case and these two stocks, I quickly just want to go over where the market is at the moment. So I'm recording this mid-afternoon on Thursday. The market ripped higher on Thursday. As I'm recording this, the Nasdaq's up around 2% to finally retake that 50-day moving average. And this comes as earnings results are coming in stronger than expected from many companies, including big tech. Wall Street appears pleased enough that Trump and his team are talking about tariff negotiation progress, claiming that some big deals will be done shortly. So as long as the tariff war kind of continues to cool and the U.S. keeps talking about progress with big trading partners, including with China, even if China is denying it, Wall Street appears content to continue to ride things higher. And then on top of that, in the kind of the trade war progress has allowed Wall Street to focus on earnings as well. And Meta and Microsoft followed up Alphabet and Taiwan semi-strong results. So overall, big tech is looking pretty good. That was kind of the big worry, is that big tech's guidance and reports are going to be brutal, and then maybe all this recent rebound would just get evaporated in a second. But overall, the results have come in strong. Obviously, we're still waiting on, as I record this, Apple hasn't reported, and Amazon hasn't reported yet either. But overall, if we look at Magnificent Seven earnings estimates, we're calling for roughly 20% earnings growth in Q1 on 11% higher revenue. And then we're calling for 10% growth in Q2, 6% growth in Q3, and 6% growth in Q4. And this is coming up against big growth last year. So continuing earnings growth for the Mag 7, which is a good sign. And then overall, the tech earnings estimates have actually started to, they had been fading for 2025, which is pretty common. From early February, they went from around 17% S&P 500 or tech sector earnings growth, 17% growth in 2025, down to about 10% growth as of April 23rd. So that was fading, which is pretty common. But then since the earnings reports have started to come in, we've actually seen it bounce recently. So now 2025 tech earnings are expected to be up 11.3%. So a 1% jump in just the last week, which is a positive sign that guidance is coming in strong and results are coming in stronger than expected as well. And overall, 2025 earnings have held up really well over the outlook for 2025 earnings have held up well as earnings season ramps up, which is a great sign. Since S&P 500 earnings are expected to climb about 7.7% in 2025 on 4.2% higher revenue. So that's a really good sign as well. So as long as those results continue to come in strong and guidance doesn't show any devastating impacts of possible trade war, that's a really good sign for the market. A few bad headlines, obviously, or bad press conferences from Trump or any of his team could maybe see investors run to the sidelines and start to protect some of their solid profits off those April lows. But the market is now, as I said, above the Nasdaq's above that 50-day moving average. And if we have another few strong sessions, we could easily get back up to that 200-day sooner than later. So, before we jump into the nuclear energy bull case, I quickly wanted to point out that Quanta Services is up 10%. It's currently the biggest winner in the S&P 500, and that is a good sign for us as with the companies we're talking about, because it is a broad-based kind of a electrification play. It's infrastructure solutions company for utilities, renewable energy, the energy industry in general. So that's benefited from kind of these broad-based mega trends from the energy transition, AI data centers, energy industry expansion, all of that. So it beat Q1 earnings and revenue estimates, and it boosted its 2025 view. So it's up over 10% as I record this, trying to race back up to all-time highs, which is, as I said, a positive sign for the two stocks we're talking about today. They're benefiting from those same mega trends of energy expansion and the AI boom. So let's jump into the overall bull case for nuclear energy before we jump into, as I said, the two stocks worth considering heading into the earnings results next week. So the U.S. government has launched various initiatives to support the nuclear energy industry revival, aiming to triple capacity by 2050. And beyond the U.S., which is also key, China and India, but especially China, are going all in on nuclear power to expand their energy capacity and become more energy independent, which is a good sign. Expanding nuclear power economy will take tens of trillions of dollars in decades to achieve, even though nuclear energy has already consistently supplied around 20% of U.S. electricity for the last 3 decades. We know that the companies such as Amazon, Alphabet, Microsoft have all gone kind of all in on this as well, landing big multi-billion-dollar nuclear power deals to fuel their AI data center boom, which is going to require more energy than ever. So large data centers can consume nearly as much electricity as a mid-sized city. Generative AI platforms like ChatGPT can use at least 10 times the energy of a typical Google search. And if Google eventually brings its generative AI kind of to the forefront, which is likely to happen, as it doesn't want to get left behind and see like kind of Google get replaced by these various other AI interfaces that might kind of make Google obsolete, that eventually all of these Google searches will kind of turn into AI searches, which will use a ton of energy. So that's, as I said, the kind of broader bull case for nuclear energy at the moment. And once again, the US and big tech are going all in. And so far, though, where the U.S. is still very kind of far behind. China is actively building a lot of new nuclear power, and the U.S., despite trying to ramp up its efforts, is not really breaking ground on a lot of stuff yet, which is actually a bullish sign for the companies we're talking about today, is that it's going to have to happen really fast, and there's going to have to be like kind of a lot of money behind it and a big push. So that's a little bit of a negative in the near term, in the sense that this isn't going to happen overnight. But if you're a long-term investor, there's going to need to be a huge ramp up of this if we're going to build out the nuclear capacity to help fuel kind of this broader AI boom over the next several decades, which is what's happening in China at the moment. And the US is lagging a little bit behind on that front. So with that in mind, we're going to take a look at the first of our two stocks, and that is BWX Technologies, which trades on the ticker BWXT. The company is set to report its Q1 2025 earnings results on Monday, May 5th. So the company is a nuclear power-focused manufacturing and engineering standout, operating across energy, defense, space exploration, medicine, and beyond. It's expanding its commercial nuclear power segment and gaining ground at the cutting edge of the field through small modular reactor technology, SMR technology. It's a top supplier of nuclear energy technologies across the public and private sectors. The Virginia headquartered firm operates mostly in the US, Canada, and the UK. It designs and engineers and produces precision reactors, components, and fuel for U.S. submarines and aircraft carriers. So it already has a really good relationship with the U.S. government. It's a cornerstone supplier for the U.S. Navy and one of only a few companies that's trusted with some of these classified kind of mission-critical nuclear energy work projects. Its non-defense sector is also growing really, which is crucial for us and kind of its broad-based business growth. It already operates one of the largest commercial nuclear equipment manufacturing plants in North America, and it's expanding that to deal with kind of the ramp up in energy or commercial nuclear energy that's expected. And it has become one of the major players in that small modular reactor industry, and part of the kind of broader next-gen nuclear energy push. It's expanding, as I said, that manufacturing footprint to accommodate some of the orders it's already seeing, which is a good sign. It also has deals with the U.S. Department of Defense to help manufacture cutting-edge micro-nuclear reactors, and it has some deals with some upstart companies such as TerraPower, which is a small modular reactor company, and then also publicly traded GE Vernova, which reported strong results, and its stock is now racing back up to all-time highs as well. So this could be a good sign for BWXT heading into next week. So looking at what it did recently, the company posted a 10% adjusted earnings growth in 2024 with 15% higher GAAP earnings, and it expanded its sales by 8% last year after averaging about 8.5% revenue growth in the 3 years before that. Its CEO said the last time it reported that its near-term outlook is benefiting from, quote, record levels of booking and commercial operations driven by critical equipment for North America's first small modular reactor project and power plant refurbishments. So if we look at the current quarter, or the quarter it's about to report, Q1, we're calling for about 9% revenue growth to get up to roughly $657 million. We are calling for a roughly 4% year-over-year decline on the bottom line. But overall, if we look to 2025, we're calling for about 5% adjusted earnings growth and then 12% adjusted earnings growth next year. And overall, we're calling for about 12% revenue growth this year and then 11% revenue growth next year. So this would mark its best back-to-back years of percentage-wise gains for revenue as a public company, which is really impressive and a good sign. Overall, its earnings revisions have trended slightly in the wrong direction for Q1 recently. That said, it has topped by about 10% on average over the last 4 quarters, and it currently lands a Zacks rank number 3 hold. Overall, just because its revisions have kind of stagnated, and they've held up relatively well, though, for 2025 and 2026. Just its Q1 estimates have trended slightly lower recently. Overall, the stock's up about 400% in the past 15 years, with including a 115% climb in the last 5 years. That said, it's still down around 17% from its November highs. It is currently trying to, as I record this, it jumped above its 200-day moving average, which is, so it's kind of ahead of schedule in terms of the NASDAQ's trying to get there. BWXT is already back above that level, which is a good sign after finding support at some critical levels before it broke out earlier in 2024. So it's trading still 17% below those highs. And if it gets back above that 200-day moving average, that's a good sign. It could get a little overheated in the near term, but if you're a longer-term investor, once it gets back above that 200-day, that's a good sign that it's heading back in the right direction. So that's just a level to keep paying attention to in the near term. Obviously, its downturn could kind of happen again quickly if the market goes sideways. So another level to watch is if it holds that 50-day, kind of just those are the two levels, the 200-day and the 50-day. If it stays above that 200-day in the next couple of days, maybe it has a strong earnings report, it gets all the way back up to its all-time highs. That's very possible, but playing it just around earnings is risky. I just want to stress that. And then on the valuation front, it is trading at a 65% discount to its highs with a price to earnings growth ratio, so a PEG ratio of 2.5, which is roughly in line with its 10-year median, even though the stock's up significantly during that stretch. Overall, Wall Street's pretty high in the stock. So of the 10 brokerage recommendations that we have, 8 are at strong buys with 1 hold and 1 strong sell. It also has a really strong balance sheet that supports a dividend as well. So certainly worth considering BWXT ahead of that Monday report. And as I record this, it's up around 1.5% on Thursday afternoon as it tries to get above and stay above that 200-day moving average. So now we're going to close with the second of these 2 stocks, and that is Constellation Energy, CEG. The company is set to report its first quarter earnings results before the opening bell on Tuesday, May 6th. Constellation is the largest U.S. nuclear power plant operator, managing over 20 reactors across roughly a dozen sites. And then earlier this year, so back in January, it announced a roughly $27 billion deal to buy natural gas and geothermal titan Calpine. The deal created the nation's largest clean energy firm, and it expands its geographical footprint into two power-hungry and tech-heavy states, Texas and California. So the deal is really important. And it also helps the company get into the, as I said, the geothermal business, but also the natural gas business, which is going to boom for years and years to come, and possibly decades to come, because natural gas plants get up on the ground and start running much faster, or I should say are much easier to build and construct, and there's less red tape at the moment than building a nuclear plant. So a lot of these AI data centers are going to have natural gas as kind of their power source in the next years and, as I said, decades to come. So that is kind of the bull case there for Constellation in terms of that deal. And then overall on the larger nuclear energy deal, especially with AI, it landed kind of one of the fundamental deals that everyone's pointing to that shows the bull case for kind of the relationship between AI data centers and nuclear energy back in September, when it landed a 20-year power purchase agreement with Microsoft. On top of that, as I mentioned up top, the U.S. government is supporting the company kind of directly via the nuclear production tax credit. So it's forecasting visible double-digit long-term earnings per share growth backed by that tax credit. It raised its dividend by 25% in 2024 and expects to increase its dividend per share by around another 10% this year. So if we look, the company is expected to grow its adjusted Q1 earnings by 18%. On slightly lower sales, but the bottom line is what Wall Street cares about. And overall this year, so 2025, we're calling for 10% adjusted earnings growth, and then 20% adjusted earnings growth in 2026. So really solid bottom line expansion is expected. And overall, its earnings revisions have trended higher recently, which is a really great sign. And it's beat by an average of 10% in the trailing 4 quarters. So its estimate 7 days ago was at $9.38 per share, and this is for 2025. And now it's up to $9.52. So that's, as I said, heading into earnings, we're seeing upwards revisions, despite all of kind of the chaos of the last several weeks. That Constellation seeing its earnings revisions climb is a really positive sign. So overall, the stock is up 310% in the past 3 years to blow away the energy sector's 2% decline and the S&P 500's 34% run. It's also still up 35% in the past 12 months, even though it's trading 30% below its all-time highs. So you can buy into Constellation 30% below its highs. As we record this, it's up around 7% on the back of the overall market bullishness in that Quanta Services report I mentioned. It is also climbing above that critical 200-day moving average as it tries to get back above its critical level, which was that it's huge gap higher from when it announced its Microsoft deal in September. So it's trying to get back up above that level as well. And if it does have a strong report on Tuesday and solid guidance, it could easily start marching well higher as it tries to get back up to those all-time peaks. As I said, it's trading around 30% below those levels at the moment. Wall Street relatively bullish on the stock as well. So of these 16 brokerage recommendations we have, 12 are strong buys, with the rest sitting at holds. And then in terms of its valuation, it's trading at roughly its all-time median at around 22.4 times forward 12-month earnings, which is also solidly below its all-time highs of roughly 37 times forward earnings. So valuation-wise, looking solid as well for Constellation. So both BWXT, the ticker, and CEG, the ticker, both those tickers are certainly worth putting on your radar heading into their earnings results next week as the market continues to bounce back. And if you're a longer-term investor, you don't need to try to worry exactly about getting in these stocks and what they do right around earnings. But both look like really, as I said, long-term winners in the AI and nuclear energy space. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over our podcast at Zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.